Hello, hello everyone, and welcome to the winners and losers for October 2nd, 2019. TLT advances 35%. So let's go to the charts. And here we are. So we have three exits. So let's put the charts on the side. We can see, yep, we got taken out right in right in the area we're looking at. So how much did Pepsi lose us? Well, let's go back in time. And this Pepsi contract, I do know, was purchased on about middle of September. So we'll take the 11th. And then we'll come here and we'll type in Pepsi. So there's Pepsi. And there it is. Pepsi has a 360. So we'll bring our calculator up. And I like to put the chart on the side so you can see how it would work out here. So, oops, clear out. So 360 was our purchase. Our exit was 289 for a loss of 71 cents on three contracts. So 3 times 3 contracts times 100. 213 loss, 213 is added to this, which makes it 5, makes it so add that. And now our new indebtedness for Pepsi on the Tigers League is 488. That's how it will happen. It'll get added to the losers, and then the losers list will be sorted from the biggest winner to the smallest, the biggest loser to the smallest loser, and then we'll go be looking for opportunity. Yes, we got some cash back. Understand, this is cash. This is, we still got some money back. We got 289 back. So if we do the numbers, 289 on 3 contracts, we got back about $867. So we're still good to go out and do something. And that's what the whole point is. All right. That said, we had T minus. See where T minus is at. Okay. T minus looks like we have to set the clock back further for T minus. So let's go back to August 15, about that. There it is. We got it. So T minus cost us 416, got out at 194. So same situation, put this here, and let's do a percentage. I forgot about that. So we lost 71 cents divided by 360 as a percentage, and our loss comes out to 19%, 19.72222. So it's in ballpark. Get into another trade, we hit a long wave, get 50, 60, 80% back, make our money back. All right, that's it. Let's finish up with T minus's exit, the jalopy. As you know, if you've been following me for a while, you know that I was not happy with T minus. And T minus lost 222, and we had one contract. So one contract is 100 shares. 222 was lost. Let's go over here to the T minus, and T minus was there at a 478. So 478 is now going to, excuse me, I'll get rid of them. And 478 plus the 222. So that takes us to 700. So they'll go into the 700. Where that falls, I do not know exactly, but my loss leaders are divided into thirds. So it'd probably be in the middle third. Then who else we had lost? We lost on SPY. Okay, SPY here. We got in at we had a 535 stop limit, and call up our calendar, call up our target, call up SPY. There's SPY here. SPY owes us 380, 308. Now it's going to cost us a little bit more. So 1067 minus the 5.35. 532, one contract, which is 100 shares in the options. 535, add that to the 308. And now SPY is going to owe us 840. Again, it's going to fall into the upper 2/3. The good part about that is there's some stuff in the upper in the 2/3 of the lost leaders that have been showing some real good potential. Well, now they're going to get pushed down into the lower part of the lost leaders list because these guys are coming in with such losses. So we're going to be able to have new hanging fruit to go chase after, and then we wait our turn. If go back in history on all these, and you'll see that at one time they were in the bottom and came back up again. Stocks recycle. Well, that takes care of the exits for the Tigers. Let's go on to, and let's reset the clock for today. And here we are. So TLT is our leader. Now TLT is an ETF, which is bonds. When the market gets scared, people start pouring their money into bonds as a safe haven. So that's what's happening here. And recall, Tigers is owed 105. This is a low-hanging fruit. This is in the lower 1/3. This is a good example, and it's bringing us 162. So we're looking at a fairly good chance of about maybe 50 bucks profit. Not the greatest, but the important point is the principle. The idea is that the lost leader becomes winner, gets retired to the winner's circle, and then we just focus on our lost leaders until we clean up our lost leaders list. And you're going to have losses here and there. It's going to happen. The point is you got to have your system of how to handle it, and you got to have your system getting back in. All right. That said, let's go on to our next person. All righty. All right. Next, holding the ground, and it's not really going very good. I mean, it's like right there. There's our long distance defense, not going in the right direction. And it's real estate, and real estate's very effective by the market because when people don't have money, they stop buying. And then those who do have property and find themselves in trouble end up having fire sales. So those who are looking into buying a home sometime in the future, you have to learn that the best starting point would be is to go to what they call bank own. And bank own means that the bank took back the property, foreclosure. And foreclosures can happen at any time. We don't have to have a down market to happen. Because down markets have more foreclosures than up markets. People have problems in their home, in their life. Divorces, lost jobs, someone's transferred by the company to one end of the country to the other end of the country, long-term military people who get moved around after 4 or 5 years, they got to sell. Sometimes they'll get marching orders to report within 30 days to the new place, so they got to set their home on and put their home up for sale ASAP and get the best price they can to accommodate their obligation. All right, that takes us to our bottom of the Tigers, and that's going to be our Walgreen. And yeah, it's close right there. There's 140 is the stop limit, and we're at 159. 19 more cents is going to take care of the situation. It happens. Okay, we just got to deal with it. All right, that said, let's hop over to the Alpha account and see how alphas are doing. Not any much better. Oh, Lord. Oh, yeah. This and you have noticed that we have just been doing calls. I really needed to be doing puts. Now, why have I not been doing any puts? And I know about puts. I do is reverse my scanners. I have reverse scanners that show when markets go into this direction where my puts are at. What has been transpiring is that I have been teaching a selected 2 handfuls, a selected group of people, about 2 handfuls of traders, and I teach them the calls because it's easier to understand the concept before you get to the puts. And we are now ready to go into the put zone. I only have one trainee, a late trainee, who's come into the game about maybe a month ago. He's catching up very well. He's 12 years old, but he's grasping the concepts very well. And now we're going to be going into teaching him puts. And puts are not really that much different because you're going to still see the same thing. You're going to still see buys and calls by price. The difference is you're going to be looking for action like this. This here is a perfect put entry. This is a perfect put entry. You just you say right there. My entry is right here. My long defense is right there. And then you set up these lines how you feel they work best for you. And then when you enter in a profit zone and puts, the value of puts go up as the market goes down. That's the concept that people have to get in their head. And as the value of the put goes up, like here on the calls, you start getting the percentages, then you look toward moving your stops down until it reverses and hits the U-turn zone, comes back up, gets stopped out, and you walk out with a nice pretty penny on puts. A key point about puts, a woman named Karen Super Trader, that was her handle. I don't not know her real name. I saw it one time in some interview, but look her up as Karen Super Trader. She made a ton of money doing nothing but puts. Now, why? Puts being the reverse of the down of the market will go down faster than it will rise. So we hit this 100 point drop today. What's going to happen is it's going to take maybe 2 or 3 weeks to regain that territory back up, unless we have more bad news and it goes down deeper. And who knows, maybe the recession that everybody's been talking about for 2 years is finally arriving. It's, there's been a lot of talk in trade schools and talking heads and everybody else. The recession's coming, the recession's coming, the recession's coming. Yes, so is rain one day. All right, so it arrives, be ready for it. So be looking for doing puts. All right, so here we have Nike finishing up the alpha account. And yeah, I'm past 15 minutes already. I really apologize for that. I just get a little bit over passionate. So here we are. So Nike had a drop. There's a nice doji. I will be looking for somewhere in this zone for a stop. There is a stop limit of 280. We're now at 480, so we have a $2 buffer, but this is encouraging. This is usually a sign of reversal, but we'll see. All right, going in now to our next loser, and that's PG, and you can see that PG owes us 867, and this is the loss leader. Now, I have not updated this. I have to go back and probably have to update this. I have to do what I call an audit, and that means all I do is go to my TD trade account, call up this account here, call up the numbers, and then go through what are my losses for 2019, enter it on my spreadsheet, and then I'll rearrange my spreadsheet from the biggest loser to the smallest loser we find out the new gain, the new hanging fruit to go after. That said, let's go to Quadro. You know, same story here. It's like, you know, we all got the same picture. It doesn't matter what it is, but we got up, and boom. So Quadro's there, XLK, and here's XLK, same situation. And we were just going after 268. Now XLK is costing me 1332. Am I upset? Yeah, you know, lose money. 268 off SMT plus 13 comes out to about $1,600. Now, am I gonna like lose sleep over it? No. You saw, if you guys have been following me for the last couple of weeks, you saw that I had some very spectacular winners at the very beginning of September. It happens. Also, too, remember too, the end of the month, especially the quarterly months, which is the quarterly months are March, June, September. Oh, sorry, it would be December. So the end of the quarterly, the portfolio managers got to make themselves look good. So what they're going to do, if they have the slightest profit, they'll sell. They'll sell just to the point saying, hey, we got out with a profit at the end of the first quarter. We got out of a profit of the second and third and fourth quarter. That's the game. Then they'll come right back in and buy it again. So we had to sell off starting off like last week, or actually, you know, Friday and Monday. and now we're into September, October, and then what does this create? This creates buying opportunities. The same portfolio managers who just sold off and got some profit. And remember also too, portfolio managers have to liquidate every 30 days anyhow to create pension checks to get paid out on the first of the month. So the result is that if they have big winners, they sell them off. If they don't have anything else, then they'll sell off the the um the top losers, or the ones with the smallest losses, to get capital back to complete their obligation, in anticipation that this is going to go up. That's what they do. They buy they buy they look at this high and they'll say, okay, when this drops 20%, which is about, call it $16, when it drops less than 60, drops $16 down, I'm going to be buying. That's what they do. They buy what they call a discount, and the discount doesn't mean nothing more than price drop. So watch out that we probably could be a V bottom, that we have such a sharp sell-off that we're going to have a sharp buy-in, because now there's a lot of cash sitting on the sideline to get back in for the investment houses. So that going on, let's go now to our last and final entry for the alpha account. And here it is. Now, this is really something. This was set with a stop limit of 50%, but we got under. So what happened was I discovered I didn't set up my order ticket correctly. That's the biggest thing. Order tickets are a little complicated, and you have to know the terminology in the setup and practice in a paper account to get it correctly. So that's what happened to me. Am I going to sweat it? No. Why? I have a January expiration. I'm not going to worry about this ice cube melting until the 1st of December. Now, if things don't turn around by the 1st of December, then I will be showing up to take up anything I can. Remember, this is a low-hanging fruit of 410, and if I don't know how much XLV owes me in their own right, but this loss will be attributed to the bigger nut. The life will not take on this debt. Life will still stay at 410. So when I enter this trade again in the future, I will be going after the 410 before I start going after the bigger nut of the 2100 plus whatever XLV owed us in the past. So that concludes the winners and losers for today. And I thank you very much for coming out and checking it out. And trade strong, trade smart, and trade to win. Thank you.